Hello guys, welcome back. Today was the day. Today was the FOMC day at 5 a.m. to 5:30, around 5 to 5:30 here in Australia. No surprises at all because, we've been mentioning that. If you have been following me since Monday or since last week, I've been mentioning that there's no big change on the monetary policy. Everyone was expecting, 99% of the market was expecting no cuts, and that's exactly what the Fed deliberated, no cuts at all, not a pause. But what was most intriguing and what's leading the market from now on is what Jerome Powell has been saying, okay? And that's exactly what I want to talk with everyone today. But before we go into those aspects, I would love you guys to subscribe into the channel and give us a thumbs up. And don't forget that tonight from 5 to 6 p.m., well, this afternoon from 5 to 6 p.m. in Australia time, I'm going to be having my live webinar that is free to join. We don't ask you anything. We just ask you that you join the Telegram group that is on the description of this video. And then we'll be sending the link over there as soon as it hits 5 p.m. Okay. So we had the FOMC rate decision today, 5 a.m., and then we had the Jerome Powell speech at 5:30. When we had the decision right at 5 a.m. in the morning, we had a pretty good drop on the DXY coming from 103,800 all the way down to 103,400. So pretty much 400 points in less than 30 minutes, okay? But that wasn't too of a big drop, I would say, or big move, because when we look back at last year, for instance, or even 2023, we had much bigger moves, much more volatility on the market. So what's happening? The market has changed a little bit, and the money is not on US anymore. The money is flowing out from US and it's going to Europe and China, okay? So listen again, the money is not on US anymore. The money is on Europe and the money is on China, okay? And why is that? Well, let's do some step backs here when Trump did his first administration, when he was the first time president of the US. And if I'm not wrong, was 2018. And then at that time, everything, he said that made the market go up. So he was, said something and then the market goes down a little bit. He reiterate that, he do it in a different way a day before, and then the market goes up. So people thought, okay, cool, it's easy. This time won't be different. Trump is here, Trump's gonna win. We're gonna bet on Trump. We're gonna buy Microsoft, Nvidia, Tesla. We're going to buy all of these big seven companies of the US, and we're going to be rich. It's a new golden era of US. Well, the market was wrong, and it was completely wrong, because Trump, it's not caring about the stock market being liquidated more than $200 billion in less than 3 months, okay, in 60 days. So why is different, and what the market is actually looking at? Because, as I say, 2-3 years ago, the market was definitely paying attention to what the Fed was saying. If the Fed says something, boom, market goes up or down very quick. Volatility spikes up, momentum comes in, traders are, positioning themselves. And now Fed comes in, Jerome Powell gives a talk, and no one literally cares. So what is going on? Well, the thing here is pretty simple. We know that Jerome Powell can't do anything about Trump. Okay, Trump will do whatever he wants, but then Trump wants Jerome Powell to listen to him and ease the rate soon as possible. He even made a Twitter on, I can't even call that X still, because X is just a letter. It doesn't make any sense for me. But on the X, he made an X post, let's say. He made an X post saying that Jerome Powell should cut the interest rate soon. He literally say that, okay? Jerome Powell should cut interest rates soon, because inflation is too high and tariffs will come in April. That's exactly what he say. And that makes me think, all right, so he's doing all of this pretty much to force the Jerome Powell, the Fed, to cut the rates. He's wrong, and the Fed won't be doing what he wants. I'm gonna tell you right now. And the market didn't believe on that. The market is not believing on that still. So all of the money are getting out from US, going to Europe and going to China. And how can we trade those possibilities? How can we actually interpret this outflow from US and look into other opportunities on Europe and China? Well, we have Euro, we have Swiss franc, we have the pound, we have Chinese yuan, we have big economies on China as well. Sorry, big stocks on China as well that we can look into buy. Even on fixed income, you know, if you are a big investor, you're looking to place your money somewhere, place on Europe, place in China. That's definitely good spots to be looking to trade a little bit. But definitely gold is always on the spot. Gold has been reaching another all-time highs at $3,050 if I'm not wrong, or $3,049, and the projection is just to continue going high and high. So I guess more the Fed talks about recession and inflation and GDP, the more the market will react. So these are pretty much the three things the market is carrying at the moment: inflation, the potential recession, and the GDP. Because if we have two consecutive negative GDP, then we have a recession, a technical recession. So if we have more tariffs, we have more inflation. And that's exactly what Jerome Powell said on his statement. We have to be careful because the first instance of tariffs is inflationary. So inflation will be hitting US again. And I'm not saying the inflation will rise dramatically, no, but inflation will be there for longer. And Jerome Powell already knows that, and he cited that the market, you know, it was kind of funny how he said, because he was like, the market seems to like the higher for longer. Well, come on, mate. No one likes higher for longer except the financial market. You know, so every day people, they want lower rates to be able to pay less on their mortgage. So yeah, it's a mess. The whole market, it's a mess. I guess the US dollar will continue to fall maybe until 100,000, and then we see how it goes after that. Euro dollar will probably raise until 1.11, 100, and then we may be looking to a contrary trend. New Zealand dollar will probably be very weak very soon because Trump has is looking to implement 25% tariff on beef as well. And as we know, New Zealand is a big exporter of beef meat, meat. And that's going to be a problem. So maybe look into long Aussie New Zealand, long or Euro dollar, and let's see how this will perform very soon. Guys, thank you so much. Don't forget, tonight, 5 to 6 p.m. Australia time, I will be live, more specifically Sydney time, I will be live, and I will be, diving a little bit deeper onto the FOMC and what are my considerations and what I think about that can possibly happen in the future. If you have any questions, bring those questions tonight, and I will be definitely happily answering your questions. If you have any questions that you may not be able to attend tonight, please leave in the comments, and I will be making some time to read those and revisit this video and answer your questions. Thank you so much. I see you tonight, or I see you in the next video. Bye bye.